Good evening, traders. This is Brian with TraderShark.com, an educational website to learn how to trade the E-mini S&P futures. Today is Tuesday, March 13th, 2012. The following are a few examples of trade setups that occur on a consistent basis. These trade setups are described in detail in the trading manual and in the live daily Shark Den, where we talk about more advanced trade setups. Today we're going to talk primarily about the wave trade because of the news announcements. We had the FOMC announcement coming in at 2:15 Eastern Standard Time. At 8:30 we had retail sales, and at 10 o'clock we had the business inventories, which were in line and better than expected. So that gave a little bit of fuel to the market. Didn't initially see it coming out of the no trade zone. We don't generally trade from 9:30 until 9:45. It's just a period of time we want to let the dust settle and allow the bulls or the bears to determine what direction they're going to take this market. The market opened up here at 1372.25, represented by the white dotted line. We saw as price action came through our moving average, there was a couple opportunities for a setup long, but we did not take them primarily because they were going into the moving average, and it just was not, because it did not follow the rules we have set up. So coming through the moving average, there was a mild pullback here, but all in all we had a wave trade set up right at about 1041 for a continuation, and this was a long, generally we'll see the profit hit very quickly. In this particular case, it took 25 to 30 minutes to actually attain 6 ticks. So that was a long sideways chop, and that was it. There was only one trade in the morning, and then going into the no trade zone from 11:30 to 1:15 Eastern Standard Time, again a period of lower volume, higher volatility. Volume was picking up today. Going into the FOMC announcement, you saw this sideways chop. It's really better to stay on the sidelines. If you're a new trader, I would highly recommend that you do not trade the first part of the morning prior to an FOMC announcement. They didn't expect any change in rates, so it's really the terminology, the verbiage that they used when they gave the announcement. Decipher whether it was good or bad. We went into a sideways channeling, didn't really have any further opportunities to get into any trades, and then we saw a nice clean wave trade set up here at about 3 o'clock. From a conservative perspective, once you get shaken out this much or sideways chop, from a conservative nature, you probably would have nailed out about 6 ticks and got out right up here, not knowing whether this was actually trending or not. I mean, we were barely here at around 1379, and then there was a follow-up opportunity to enter here into the long position for another 8 ticks. Now, I did not get a chance to jump on this second trade here. You could have held on with a holding indicator that we show in the Shark Den. And the holding indicator, if you had held on for this entire time frame, our holding indicator was just bright green. We had our signal to get out with, there's no way for us to know that this thing would have continued on higher. There was a last opportunity to get in. Notice our double green dots down here to the bottom. Another opportunity to get in. I did not take that. I colored it in yellow, but this market just would not stop and worked its way up into the shark bands that we have in the trading room. 1390 to 1392 is actually our 4th level shark band, which is very rare for us to see that get hit. And when it does, that was the stalling point. And then right after hours, we saw a nice little sell-off. So all in all, we've had a couple days where a lot of sitting on our hands, just waiting for some nice clean setups. If you got anxious, you could have gotten chopped out. If you want to learn more about these or more advanced trade setups, or to get a copy of the Trader Shark Trading Manual, please visit TraderShark.com. Thank you, and I'll see you in the Shark Den in the morning.